Hi. All right, guys. Yeah, once again, welcome back to my channel. So today I wanted to bring to you an update. Anytime I see a quick update, I need to just record and then give you that update so that you can quickly execute, not just execute a trade, but also learn a little bit of information from why we do what and why we take what trade and why we don't take what trade. So today I'm basically on step index. Okay, this is um, purely ICT type of analysis. Okay, I'm an ICT fanatic and a child of ICT. So um, this is purely ICT strategy. Okay, so let's go into the video and see what's transpiring. And I want to tell you that even with this style of analysis, you can apply it in on any asset pair you want to trade. Okay, any asset pair you want to trade, you can apply this strategy on it and it will work for you. All right, so quickly let's go to the video and let me show you what you should be looking out for. Okay, so we are on the, let's go to the monthly. So we are on the monthly. As you can perfectly see here, we are on a monthly time frame, and you could see the price traded all the way from this high to this point and then to this low, and then it surged up a little bit and then it's trading down towards this direction. Now let's go to the weekly time frame. So here all we see is the bearish movement. So let's go to our weekly time frame. I would like to say that if you are new to the channel, please subscribe and then like this video for me so that it would be recommended for others to watch as well. You can go through my videos, you'll find a couple of very educative videos you can watch and then learn more information from. Okay, so let's continue. Now when you have a market setting such as this, where on the monthly you saw that we were in a bullish we were in a bearish movement, and then on the weekly, this is what we have on the chart. So let me quickly put some annotations on the chart for you to see. So on the weekly, this is what you see. We had this high in here which was taken. Okay, so the high here was this is a buy side liquidity which was taken, and then a sell side liquidity too which was also taken. Okay, so we had all this low. Okay, it had sell side liquidity, price rated it. Now on the normal, we were moving from this high to this low to this high, and then we broke down to this point. Now you could see that before this particular price point, so if you have been following my my videos, you should know that if we have such swing from this swing high to this swing low, and then to this swing high, and then to this swing low, and then to this swing high in here, okay, if you pull your if you're going to draw your, okay, so let me put this. So you could see clearly that price actually readed the high in here with a little bit of wicks, okay, to the upside. So obviously we know that we have the structure of the market shifted to from a bearish movement to a bullish movement on the weekly. Okay, on the weekly. Now watch this. In as much as we had this short-term low before price moved towards this direction, it formed a short-term low and a short-term high in here, a short-term high and a short-term low in here, and then what it did was that it raided the short-term low that it formed, and then it traded through the short-term high that it formed to form that particular high, the recent high that's here. Okay, before price broke down again and then came back to the high, and then ultimately it broke down. So on the weekly you could see that, well, you can see that this is a high, this is a low, and a high. So this is a lower high formed in here, this is a low, and then a lower high formed in here, and then a lower low, a lower high from the end. So you could see that you're having more of a bearish movement or a bearish structure in here. Okay, but then yes, sometimes one thing that I would want you to know is that when you are trading, you should look at the overall direction of the market. Okay, don't just use for instance, as you see in here, to make your judgment or to draw your judgment and say that, oh, now price is moving from higher high to this and all that. Don't just use that. Okay, so we have a structure shift, so all we expect is market should trade back into an area of interest, okay, before it ultimately does a reversal back up to the new direction of trade. All right, so beautiful. Now, in as much as we have this, so in as much as price is supposed to trade down, definitely it has to use the bearish trend to trade downwards. Okay, so for instance, if you see such thing, don't say that, oh, now the market has shifted side again and then it is trading, it's now in a bearish. We are seeking for price to come down to an area of interest before we continue to the buy side. Okay, now whenever you are trading, always add this if there is an if clause. Okay, always add the if clause to your trading. Okay, now should price get to this point and then break this low, that is when we can say that clearly we are pushing further down. Okay, clearly we are pushing further down, and if price doesn't break it, then we are looking for more higher prices. Okay, now when price took liquidity resting above this high in here, I was expecting price to definitely come down to seek for another liquidity, more liquidity resting below this equal lows in here, so that we can use that and then run and rally up. Okay, now so my premise now is still we have violated the structure in here, and then we're still seeking for lower prices or discount prices anytime. So anytime we have market, you can go over my videos, you will find where I showed you what we have discount and then premium prices. Okay, so discount prices, so when you take a swing from this swing to all the way to this swing low to this swing high, when we take this swing and we divide the chart into two, so I just drew I used a box to divide the chart into two, or you can pull your you can use your Fibonacci to try and then divide your chart into two, which equally lands at the same spot. Okay, which means that there's an upper portion, 50% of it is the upper portion, which represent the premium prices, and then 50% lower here is the discount prices. So whenever the market is at premium, or is trading at a premium price, it's seeking for more premium, or is on a premium and it wants to go further with premium and trade higher, it seeks for discount prices to rally up into having more premium prices. Okay, so excellently, that's how the market does its thing. Okay, so it seeks for, so now we're looking for price to seek for more discount prices so that we can rally up into our premium. Okay, so let me delete this and then delete this as well. That's just by the way. You can go through my videos, you'll find video on where I explain thoroughly about premium and discount prices. Okay, now in as much as price has traded down all the way to this area, now you could see this particular downpour candle here with this long wick. What did it do and what happened? What this price did was it actually traded into an order block inside this area. There was a daily order block inside this area that price traded into. Okay, that we saw this reversal up here. All right, so now let's go down to our daily time frame. Now on the daily, so we are still trying to narrow down our trade, as in where price would likely reverse. Should we still maintain the premise of the bullish market where price will likely reverse? Okay, so now we are still seeking. So why did price trade into this area and reverse? So let's go down. So price actually traded into this area, into this order block, this bullish order block resting here, these two continuous order block. Price traded into this, and then it was bounced off. Okay, it was bounced off. So on the daily, we had another block that price traded into, why it got bounced off from this particular price point. Okay, now beautifully, if this price point has been bounced off and then it traded into another block, so it means that this also becomes another order block after an order block. Okay, so now what do we have in here? So price treats watch this, can you see this? So price treats here, this was a high which was formed, and then it broke down this way and formed this other block. So price treats into this other block, and then it gets bounced off into this high, and it takes the high resting in here. Okay, now obviously it means that this particular area has tried trading into this other block, and then it has respected the other block to trade higher to take the high in here. Okay, so then means that inside this area, if price has swept a high, okay, a buy side liquidity resting above this high in here. Now let me take my time and give you more understanding. On the weekly, price has accomplished something here already, and it has accomplished something here too as well. Now we are looking for a place where currently price can obviously reverse up, as price has traded into this area already, and it has done this already. So inside this candle, it means that there will be a likely area where price can obviously reverse. So now we are going back to our daily time frame. So this is the first leg, and then this is the second leg. So inside the second leg, we may find something here that, or a form of liquidity, or a form of PD array that price can actually reverse on. Okay, now so on the daily time frame, you saw that price created this low and created this high. So inside this low, price rated it. So this is a sell side liquidity has been taken, and a buy side liquidity which has also been taken on the upside. Now price reversed back into the point of interest, or area where the buy side liquidity was taken. Okay, this low I don't expect it to be taken. Why? Because it has already taken a buy side liquidity. Okay, so there are no more others resting in here. Okay, so now let's still go down. So why did price not reverse from this other block, and then it's still pressing downwards? Now let's go down to a smaller time frame and see if there is any reason why price is still pressing down, or is it pressing down into this other block? What is the reason? Let's go down and find out more on what price is seeking to do. Okay, now on the 8 time frame, we still have wicks. We are seeing only wicks in here, and we don't know why price is still pressing down these wicks. And so let's now go down again to 4-hour time frame. On the 4-hour time frame, what we see is that price had already traded into this area. This is another block. Price traded into it, and it goes bounce off, traded into it again, and it goes bounce off. So now, apart from price trading into this other block and getting bounced off, we are not still seeing anything. All we are seeing is that there's a low in here, this low, which has some sell side liquidity resting below it, that price can obviously come and sweep. The buy side liquidity resting below this has been swept by this particular bearish candle here. So you could see that it's lower than this particular two. So we don't expect, I'm not expecting price to come down to that level again. Okay, now let's see. So it could be that there's sell side liquidity resting in here, can be swept. Okay, that's how come maybe price is pressing down. Now let's look further on the 1-hour time frame and see if we can still find something reasonable in there. So on the 1-hour time frame, you could see that there's this bearish order block resting in here, that probably or possibly it can be the mean threshold of it that price is trading into. So you could see that price is actually, I placed the trade almost in the middle of the candle, which is the mean threshold of this particular price action here, expecting the price will just drop into the mean threshold and then trigger the trade, and then we'll see what happens next. Either way, let's go down to our 30 minutes time frame. On the 30 minutes time frame, to what are we seeing? On the 30 minutes time frame too, we're also seeing that it's the same thing, a low resting in here. And then another thing that we can see on the 30 minutes time frame is we have a fair value gap resting inside this area, okay, we have a fair value gap resting in this area onto this 30 minutes order block also here, which is also a probable reason why price could be seeking for more lower prices. Okay, now on the 15 minutes time frame too, let's look at on the 15 minutes time frame. Beautifully, we have another set of setup here. Is the same thing as what we saw, which is another fair value gap resting in here before this, let's say, order block. And then you could see that before the order block, and you could see that the low is also here, which has sell side liquidity, and this is almost like equal lows. Okay, we have equal lows here and fair value gap, I mean, which is a beautiful form of attraction for a beautiful form of liquidity that prices usually have to trade into and then seek for liquidity from those points. All right, so anytime you're analyzing your market, you can look at market from this angle. Okay, anytime you see price going down to a certain price point, all you want to do is that you are looking to get a point where price is either seeking for liquidity on the lower side, so that it trades off of it and then it goes up higher. Okay, so basically that is how I have done my analysis. Okay, so every time, anytime you have probably maybe a shift in structure, so for instance, in this short bullish short bearish market, even on the daily, we had this movement in here. So we had a swing high, swing low, swing high, swing low, swing high, and then swing low. And then watch this, we should have had a swing high, right? We should have had a swing high. Now the swing high shouldn't violate the previous swing high. Now the swing high actually violated this previous swing high, which obviously tells us we have had a shift in structure. Okay, you can just put your cursor on it. You could see that the high is 8510.6, and then the high in here is 8509. Okay, 8510 and 8509. You could see that the difference is this is more higher than this, so we violated it. You know, sometimes we are seeking for price to have a beautiful a more strong what's the name, violation, or a more strong break to the upside with bodies of the candle, so that we see that yes, the displacement to the upside has been done fully with bodies of the candle. But either times too, you have to just take it as it is. Okay, so now if you place your trade here beautifully, all you can do is you play your stop losses below. So on the 1 hour time frame, let me give you that premise. On the 1 hour time frame, we see that okay, I've placed my trade just below this, and then into the almost into the other block, almost into the fair value gap resting in here, and then my stop loss is at the low of this particular price action. Okay, now beautifully, this is a little bit of analysis that I had for you tonight. So until we meet again, so I have a video, I have a class that I'm organizing for those who don't know how to trade, who are new to the market and all that. Okay, you can get the link to the description in the description box below. If you like this video, give me a thumbs up, and then if you are okay with it, just give me a comment and all that. So I wish you all the best in your trading, and enjoy the rest of your day. See you.